Okay, so let's get started. So basically, we've got this. We're going to talk about Tesla stock today. There's been 10 consecutive days of gains for Tesla stock, 41% increase, and I think it went up from $188 to now $265. Today's Tuesday. And so we'll want to just understand better what happened and what's going to happen next. And then Nick is here as well. And I want to invite him because he had a post and he's talking about that he thinks that Tesla can run much higher. You've got a list there, Nick. We'll get to you. But there's also people who think that after, the run up in 10 days in a row, we're nearing 90 on the daily RSI. I don't know what that exactly means, but time for a 10% pullback to 230-ish. Let's start with you, Jeff.
Yeah, I mean, thanks, Herbert. I think this was basically a collision of fundamentals and technicals with what's going on with the stock. Obviously, Tesla got through production and deliveries a little bit of a surprise, and it was really a surprise on multiple fronts. I think that's what people are sometimes missing. You had energy, you had the inventory drawdown, which is going to be great from an earnings perspective. You had just an overall good number, but I mean, even leading up into that, just 3 or 4 weeks ago, right? We had the shareholder meeting. We had this huge kind of burden, at least partially lifted, because that could have gone, in a different manner. And you also saw, pretty energized, and you see a very energized and engaged CEO. And then you're also seeing, the improvement in the product with SD and the progress that's making. So you have all these things coming together. Then you have this technical multi-year downtrend. You have the 50-day and the 200-day and the stock progressing through those, and now those were prior resistance, and now they turn into support, and you're here. So in terms of where it goes, I mean, it's hard to know. I mean, this is it's definitely technically, stocks usually take, a breather at some point. It doesn't have to. No, there's no prescription or it has to do this or it has to do that. Tesla traded during, I think, November of 2021, it traded at over, I think, 250 times forward earnings. So there's precedence in being up, where we are today, which is probably in the 110, 120 times range. But then this is all based on, what you think earnings are going to be over the next year. And I think we're in this dynamic transition of the company of like, what are the earnings and where are they coming from? It's not going to be the earnings from 2 years ago. It's going to be different sources, and they're going to ramp at a different rate. And they're probably going to have a terminal earnings rate that is much higher than building a vehicle, just building in auto. So when you have all these factors in place, market makers, people have to make, the markets, you usually try to get ahead of these things and don't want to necessarily be caught flat-footed. It was also under-owned. There could have been some, a slight tick up in terms of, hedge funds being on the other side of the trade for deliveries. There's all these different factors out there. But for me, it comes back to the fundamentals and the technicals working together and, putting us where we're at today. So anyway, I'll pause there.
Okay, great. I asked Nicholas Gibbs to join because he had a post today that said Tesla can run much higher, and you have your list. You said still not at all-time high, still no robo-taxi, still no rate cuts, still no friendly president, still no Optimus update, still no next-gen vehicle, still no licensing deal, and many more I could list. Why don't you share what you're thinking?
Yeah, hey, Herbert. You can hear me okay?
Very well. Beautiful voice.
All right, perfect. Thanks. I want to make sure I got the right mic on. Yeah, so let me caveat first saying we could easily go back down. Like there's no reason we can't go down $50 tomorrow, right? Anything could happen. So the impetus behind my post wasn't to sit here and say we're gonna go up forever and it's just gonna be parabolic and that's all that's gonna happen. But mainly to say, a lot of the factors that we have all invested into this company for, for some of us since back in 2016, for some of us back in 2012, for some of us in this last year. But a lot of the reasons why we started investing in this company, those things haven't really come to fruition yet, right? At least not the big bets when it comes to FSD, when it comes to Optimus. And we've really sat under 4 years under an administration that has not been friendly to the company. And you add into that, it's been, arguably in, the last 20 years, one of the most difficult times to invest when it comes to interest rates and being able to take loans, especially for a company where their main thing that they sell requires the majority of people to take loans out. And it's been nothing but friction this entire time. And so now as we get to this 8-8 event, and again, I don't mean to sound like, I don't want to say Uber Bull because I am an Uber Bull, but I don't mean to sound like, everything's going to be amazing forever. 8-8 could disappoint, right? It could easily be something where Elon just says, hey, this is the cyber cab and it's a 10-minute thing. And then he walks off and that's it. And everyone's disappointed. That's possible. But there's lots of room to run as far as the story and the narrative. Last earnings call, he said that he'll talk and they'll discuss more about the next gen vehicle during the robotaxi event. We still haven't had an Optimus update. Is after listening to Jerome Powell today, sounds like rate cuts could come in September. Right? There's lots of things that still could come in and stimulate the market. So my point in that post was mainly to say, look, we have come a long way, but that does not necessarily mean that we need to take a breather or we have to come down. I mean, even if you look at the Fibonacci retracements, if you believe in that kind of stuff, I know Xander's on here, we actually still have 2 more levels we can come up if you do a retracement from the last time we were near these levels this time last year, right? So we can still get to 300 and we can still get to 400 actually. So I don't know. The whole point of that was I'm sitting here listening to a lot of people saying, oh, it's run up too much. It's gone too far. CNBC saying, their piece, their point of view. But I think Gally said it the best, not too long ago. Tesla might be having its NVIDIA moment. And that's seriously possible given all of these potential catalysts. Now, just again, to be sober, at some point, we do need to start seeing revenue come in, margins increase, see some of this cash flow get down to net operating margins and operating cash flow. So all that does have to happen eventually. But as you've said before, Herbert, we went down really quickly. There's no reason we can't regress back to the mean. And so, I just want to kind of level set on this isn't over, in my opinion. So I'll stop there and let everybody else tell me why I'm wrong.
You set yourself up. Thank you, Nick. I do want to ask the question to the panel members is, do you believe that the run up in the last 10 days, is that, because of the negative sentiment and just catching up, or is there a lot of excitement for the upcoming 8-8 already there? I want to get to you, Omar, soon, but I want to ask Xander, I know you've been on vacation, so you're normally somebody who are very, knows the short-term stock movement. You follow that very closely. You play options, but you've been on vacation. You went to Niagara Falls. Are you following it closely? And what do you think has happened in the last 10 days?
Hey, yeah, I am following it very closely, whether I'm on vacation or not. But I think that at 200, you had a lot of the buyers of the stock or sellers of the stock were basically exhausted. If you look at the distribution of the shareholders, we spent so much time under 200 that once we broke through, you have a gamma squeeze of options buyers buying in. You have put buyers closing out their positions. Market makers are, delta hedging, and so as the more option buying occurs, you have this kind of runaway train. Is it going to take a breather? Probably. Statistically speaking, these runs last 10 10 days, 12 days. I don't remember who used to post the run, but I think that ultimately you have a market that's giving some credit for Tesla being an AI play, and it's an undervalued, grossly undervalued AI play. And so, the market is uh, believing it. And I also think about like the 2019 moment where you had Tesla being unprofitable, and then Wall Street investors get caught off sides, and they just or flat-footed, and they're betting that it's going to go down, or which is exactly what was happening going into the production delivery numbers. But I think the big surprise there is that the energy piece of the story is what's perhaps causing this rally. Obviously, no one knows why the market says, "Hey, maybe it's the 8.8 event, maybe it's the Elon comp package, maybe it's everything combined," which it probably is. So I'm bullish. I think that you got to be careful if you're like trying to FOMO into options, because the implied volatility is going to continue to increase the further we fly in this short time. So it should be wise to kind of separate things out, maybe take some off the table, maybe not put everything down on the table, but in terms of the options world. But overall, my stock portfolio is doing great. The long term thing, the short term, is doing great as well.
Oh, it was great to hear your comments because you seem to have a good finger on the pulse there. Omar, I know already what you're going to say. You don't know, you don't care. But maybe the question is 8.8's coming. Do you think that the excitement about that is underplayed? Is it overplayed? Are people getting too excited about it yet? Or what's your sense by just listening and following people's comments on X?
Yeah, I mean, I think instead of studying the short-term price action, people would be better served guessing how many times Elon is going to fart today. That might be more instructive, honestly. Because when you zoom out, the stock is flat, okay? It's been flat for the past 6 months. We started the year at 250. It's around 250 now. It's flat. If you believe this company is going to be one of the largest companies in the world and is going to be 5 to 10 times larger, any 5% move in the grand scheme of things is a 0.5% move. So it's really neither here nor there. I mean, are there going to be setbacks along the way? Bad quarters, days when the stock doesn't go up? Of course. But I hope if there's one thing we can reflect on from the last 6 months, I mean, how many spaces did we have where people were panicking, crying, saying we need to advertise, we need to fire the board, we need to fire Elon? And here we are 6 months later, back at the same place. So let's not be foolish. Let's not worry about the ups and downs along the way. I think the market is really looking at this and they're saying a lot of these fears were overblown. A lot of these sort of apocalyptic scenarios haven't played out. And this is the most undervalued AI play on the market. I mean, I think the rollout of FSD 12.4, which is happening slowly at about 4% of the fleet, this is more significant than the launch of the Model 3, in my opinion, for the earnings power of the company.
No, thanks, Omar. Yeah, from everybody I've been talking to and hearing from, they are saying that they believe that this run-up is mostly institutional, that the narrative has changed from the institutional side, not just the retail. So that there is a sentiment there. Nick?
Yeah, I just kind of want to echo something that Xander and I think Holmar's alluded to. One, don't make the same mistakes, you might have done in the past with margin or anything like that. And, don't get too smart and try to start selling calls now, and then you get your face ripped off. And then the other thing, like Omar was saying, like, we don't know why the stock's actually going up. We don't know if it's because of AA. We don't know if it's because of better numbers or deliveries. So just stay sober and stay humble. You don't actually know what's happening, but like he said, zoom out, look at the long term. That's all that matters, right? I had somebody literally text me the other day, or the day today, saying, "Hey, it's at 255 right now. Should I buy?" I was like, "Yeah." He's like, "Are you buying?" I'm like, I buy every week. Like, I don't know. I just buy. I don't care what the price is. It's irrelevant, because if I think the stock's gonna be a $2,000, $3,000, $4,000 stock, I don't care if I get 250 or 260. It's irrelevant. Right. So just a word of caution, don't make mistakes that we saw back in 2022, where every other post was like people getting margin called and all this, and just stay humble, enjoy it. Because if you get into bad shape there again, it won't be good. And again, not to say or predict anything, but we could easily go into a recession. The 2 and 10 year yields could invert, which historically is a signal for like, we don't know what could happen. Play it safe, be able to go to sleep.
Just take a look at your stock app and zoom out and go to the all. And you'll notice that the beginning portion of Tesla stock, it looks all flat. That's what I mean when I say the stock is flat today. During that interval, there were a lot of dramatic moments. There were moments where the stock had a 50% decline or more, and a lot of emotions were felt. But zooming out, it all looks flat. And this period, it's going to look flat. And all of this drama that we're seeing on the ground will just look like a straight line at that order of magnitude.
Okay, thank you for that. So let's invite Simon Hale up here. He's a wealth advisory firm, manages wealthy families up to 300,000 Tesla shares. Simon, what have you been thinking? And I know you've got your own technical analyst also on your firm.
Yeah, Nick, that was a really good point. I agree. Just, be conservative with this. Play the long. This is a 10 to 20 year, this is a marathon. Don't sprint from the beginning and blow yourself up. So really good advice. Holmar, when you're talking about this, you're like next level thinking and you're bang on with it. Not many people think in those third or fourth dimensions like you do, but we all appreciate it. My view of why this most recent run is you take a step back and it really is there's just more buyers than sellers. But when I look at the volume on a day-to-day basis, like recently you got 150 million shares. You're talking like $40 billion with a B being exchanged in one day. That's big institution. The volume's up by maybe 20-30% from an average. It's still below what it was 2021, 2022, sort of as Tesla started to fall and people fell in love with NVIDIA. But what I get the sense, and I don't have the facts or the numbers on this, but what I do get a sense is the majority, and when I look into big hedge funds, big institutional managers, they don't own Tesla, or if they do, it's really, really underweight. And I know that many of them have been burned by clients because they didn't own enough NVIDIA or they didn't own it at all. And people are looking for the next AI play. And Tesla is all of a sudden showing up on the radar. Good researchers on the street are starting to bang on the drum. And I really think that big institutions are underweight this. So this isn't hey, they're trying to back up the truck and take advantage. They just need a weight in it, because if they don't show that they have Tesla at the end of this year, they're going to lose clients. And so I think that's where it's coming from, my theory. And when I talk to, other hedge fund managers and big institutional investors that I know here in Montreal, they all talk about how they've underperformed because they didn't own NVIDIA. So that's my take on it. It's just more buyers than sellers. Be really conservative if you're investing in this. Don't use too much margin. That's what Nick said was excellent.
So what do you think of what his list? Do you agree with that? So you're basically saying that it's more buyers than sellers, which is a nice way to say it. But and it's institutionals, and which means they don't want to miss out on the run up. But then you said that maybe they think it's an AI play, or do you think that
I
this
think
is just?
I think it's being revalued as an AI play. I've never.
Okay.
It always people in this forum I think have been much smarter and just way ahead of the curve. And I think that we've been looking at this. I talked about this to our clients last year in August, and I said this is going to be looked back upon as a monumental moment when Elon Musk did his first neural net drive end to end, and there was tumbleweeds in the media. Right? He published something recently about this is our new data center and we're building it out. And the stock did nothing. He's like, this is the biggest supercomputer in the world and we're going to create artificial intelligence. So I think people in here are so dialed in. But I think what's happening is institutions are now repricing this from a really fast or a high growth automobile company that's had great margins. Now they're saying, oh, this is an AI play. And they're starting to model that out. So they're starting to put not just energy into their models, they're starting to put robots into the models.
Okay, interesting.
Hey, Herbert.
Yep, go ahead, Jeff.
So I don't want this to be taken the wrong way, but I just want to just put some general commentary out there. And you've heard me say this before. First off, in Cyberbulls in general, we like talking about the business. I like talking about the business. I know everyone else does too. And like what drives the business, and as the business moves in a direction, at some point either the market gets ahead of it or it catches up and it finally realizes this, as Simon was talking about. This whole thing about like talking about stock movement and talking about like don't go on margin, that's very like individual advice that someone who like if you have somebody that you're consulting with to manage your money, that's the person you should be having that conversation with. Or if you don't have somebody you trust that you can have that conversation with, that can look at your financial situation and understand what you can and can't do, because everybody was saying don't go on margin at 140 and you basically would have doubled your money in a couple of months. So I don't particularly like that advice, just going out all the time. People were saying it at $100 too. What I would say is like, you should have an individual financial plan that works for you. And if you don't understand how to do this, or if this is new to you, you should be working with someone you trust to make that plan. But don't listen to people on the internet about what you should do with your money. Listen to like nuggets about the business, and then pressure test those nuggets. Like in these spaces, you have the opportunity to come up and ask a question and challenge an assumption, or you have people that have really in-depth experience about some particular facet of this business, whether it's money management and with like Simon or what Omar's doing with FSD or others on this panel. It's a very talented speaker group. But in terms of like this, like what you should do with your like buy here, I personally would stay away from that. Don't listen to people.
Jeff, 100%. You should work for our compliance department.
Yeah.
Seriously. And we have had clients call us and say, hey, I'd like to use some margin to buy Tesla. And so we analyze each situation and say, what's their ability to borrow, so that they never get into a margin call. So we're not against it. But again, there's somebody overseeing it and we're advising them so they never get into that situation.
Yeah, exactly.
No,
It's good advice for a beginning investor. For investors who know what they're doing, leverage can be a powerful tool, of course.
Yeah.
For sure.
Yeah, just to clarify my comments, I was just saying, don't, if you've done something in the past, don't make the same mistakes again. But I agree with what you're saying, Jeff.
Yeah, no worries. Just getting that out there.
Thank you. So let's go to you, Larry. How are you doing?
Pretty good, Herbert. Great to hear all these very wise voices. And just for the record, Jeff, I always advise people to stay out of margin, and no matter how experienced they are. One of the largest investors that I ever knew. He had $2.8 billion at risk. He started from scratch again after all of that. So, yeah, I regard margin as the devil. Yeah, I just wanted to point out that in the last 6 days, we have traded 819 million shares at just on $200 billion a day, total of $865 billion traded. Sorry, not $800 billion a day, $33 billion a day, just a total of $865 billion traded. So if anybody thought that this is a retail activity, no, it's not retail activity. This is institutional activity, probably hedge fund level activity, more than, retail buyers, but it's possible retail buyers are entering. And it's a, sea change of attitude. We've seen these sea changes happen in both directions several times. To Omar's point, I mean, he's right on target. This is like just another day with Tesla. And if you have a long-term viewpoint on this, this is really a distraction from the business and analyzing the future of Tesla. And yeah, people are beginning to realize where Tesla is. I personally think that where the stock is today is a direct reflection on Elon's opening up at the last earnings call, and on his openness at the annual meeting, at the shareholders meeting. And I think that this run really depends not so much on the actual results in the upcoming shareholders meeting. It depends upon his openness and his his willingness to engage with the analyst community. I think that their reaction and the institutional reaction to him, to his approach will be, will be gauged by his approach. That's my view. Now, as you know, I'm a long-term holder, so I don't really much care about all this excitement and action. I think, the stock will go up or it'll go down, one of the two. But I'm buying for the long term. I continue to buy. I continue to be a supporter of the stock. I continue to be a supporter of the company. I think the company is doing great. I think we are in a wave. I think they were very upfront with us to tell us they were between waves, and I think we're in a good situation given the businesses that we have on hand and that's coming to fruition. Hopefully those businesses do very well. I think the opportunities with Tesla are probably as exciting as any company on the planet right now. And it all depends on execution. And as long as we have Elon in this leadership position, I think we'll execute very, very well, because he's a master of execution, or he's proved himself to be a master of execution in the last 15, 20 years. So I think that's what counts. Anyway, that's my perspective.
Thank you so much, Larry. So it's interesting, today is the day that not only after the 10 straight days of rise, people are considering Tesla to be, well, for sure, they're now in the top 10 list again of the largest market cap companies. And then people are now considering Tesla to be part of the Mag 7 again. At the same time, the short positions of Tesla have climbed to their highest since 2021. It's now at 3.84% of the float, $31 billion worth of shares shorted. And Alexander Mertz is going to do a full report, a new update report on the short. She'll do that in a couple of weeks. We'll report that. But, so we haven't heard from you, Adrian, whether you want to make comment about that or anything you've heard so far. Did you want to jump in the conversation?
I think it's really weird to see how much the stock is rallying at the moment. I haven't found anything that's truly compelling. Like we can talk about, say, energy, or we can talk about the identification of it truly being a AI company now. But still, I don't see anything that's really, really compelling. I feel like maybe there's something bigger, but I think maybe of all the theories, the AI play is in fact the most compelling. The question is just why now? Well, I think the best reasoning would be because of the supercomputer in a sense that they're building. But beyond that, I really can't see anything else that's really so compelling where I say, yes, that's definitely the thing that's causing this. That's just my thought. I'm just still perplexed by all this a little bit, but maybe it's just the AI play. That's most likely.
Oh, interesting. Omar?
Yeah, I don't think it's AI necessarily. We don't have a lot of news there. This really started with production and deliveries. You had a beat there, you had a beat on energy. And looking forward, we're looking like it's going to be a record delivery number in Q3. We had, of course, lower production last year. It's going to be an easy comp. So we're going to not have this narrative, oh, their sales are down year over year. We're going to have a record number. We got Powell making some comments today. Rates are starting to come down. That has I've always said, rates coming down, the stock won't go anywhere until that starts to happen. As the market starts to expect this, they can understand that the earnings power of Tesla is going to increase. People will be able to buy more expensive cars. Then, of course, there's the rollout of FSD. There's the impact of these layoffs, the surprise of energy, which, would probably add about 10 cents to EPS. So you really look at all these things, and then you got the CyberCab event. You've got FSD hands-free rolling out, Smart Summon and Banish, and it's looking like a good string of events for the next 3 months. I think all of those are probably weighing into the price action, and it's probably more just the fundamentals of the auto business than anything AI related. I mean, you may say this is a great AI play, but just because you believe it's a great AI play doesn't mean you want to buy it when earnings are decreasing and volumes are decreasing and sales by unit are actually down year over year. Now, as we move into the back half of the year and we're talking about record deliveries, how much did sales grow year over year? How much are earnings up rather than down? The AI play becomes a much more interesting play to make because you've got a core business that is strong with margins improving.
Love it. Yeah, that's where I stand as well. I agree. Nick, you had your hand up?
Yeah, Simon's had his hand up for a while. Let him go first.
Go ahead,
I just think people are overthinking it. Like it's many people in this forum understand what the true value is. What is the true value? Like I had no problem buying the stock at $400 because I understood what the true value is. And I suspect what's happening now is many on Wall Street are just waking up to the fact that, holy crap, we've been offside on this and we were focusing on the wrong thing. This is an AI play, and it's the biggest AI play that we can find on the planet. Personally, I could be wrong. I'm usually right 60, 70% of the time. But I think that's the case. And I mean, I think, 300 it breaks. And from a technical standpoint, we've got one of the best technical analysts on the street. And if you follow ISI, that is the best technical analyst in the world for like 9 years running. And he's banging on the table on this. And he's saying, guys, this is now part of the Mag 7. You need to own it. Don't think, 250, 290, 300. It's like this thing's going to 500. And he's been right on with NVIDIA. He's the reason that we didn't sell NVIDIA at 300 or 500 or 700 after the split. He's the reason why we backed up the truck on Amazon. And the same thing. Like, so I think what's happened is early stages of a bull market, and we're in a bull market similar to 1997. Eventually, things go up and you don't understand when you're just looking at the fundamentals and you're looking at earnings 6 to 12 months out. But eventually you see why they're justified. And we've made the mistake of selling companies in the past too early because we thought, okay, the cash flow or earnings multiple just isn't justified. And then a year or two later, we realize, oh my gosh, we missed that. We weren't looking 2 years out, and that's what the market was looking at.
Let's go to Nick. Nick, were you that posted today the Peter Lynch quote? Was that you, or was that Yashu?
That was probably Yashu, not me.
Okay, go ahead. Yeah, he basically his quote of Peter Lynch was something very similar to what Simon just said. Go ahead.
Gotcha. Yeah, it's just 2 quick points. The first one is, again, I really don't think we know what's happening here. I don't even think it's deliveries or the energy numbers, because if you actually were watching, we start to run up before that information came out on the 2nd. So it could just be that, people, second half of the year, okay, we want to be on the right side of this, the way Simon's saying. But ignore the stock, forget all that. Herbert, you know what I do, and I interface with a lot of CTOs, and we have a lot of AI projects. I put that in quote because my feeling. I think Tesla's the only real AI company out there, but a lot of the CTOs I interface with, in fact, with one of the largest insurance companies out there, I spent all of 4th of July with them in Atlanta at his lake house, and when we were talking about FSD, he had no idea. He thought that it was just autopilot on the highway. He didn't believe me. He started asking my wife when I wasn't around, saying, can it really do this? Can it really do that? And I kept telling him, come out with me. Like, I'll take you wherever you want to go. We'll type it in. And my point is, that to me is really all I care about right now is FSD. Like, the amount of people that still have zero clue about what this is and what it means and the implications of this is bewildering. We're obviously all in our echo chamber here, but I'm sure you all talk to other people and they all just think you're crazy Tesla fanboys or fangirls, but people don't understand. They really don't understand how this will change the way the world works, the way cities are built, the way parking garages are designed, right? Like, it's highways, everything will change. Apartments, houses with garages, everything will fundamentally change. It will be archaic to drive, and that is the real thing. So I don't think people are seeing this as AI company yet. Many hedge funds, whoever's coming in, probably say, okay, well, we need to have a stake because we can't screw up again like we did with the NVIDIA, right? And NVIDIA is just a hardware company, really, at the end of the day. Okay, CUDA, I know Hans is probably listening, and all the stuff they're doing with NIMS. It's interesting, but really, when you talk about actual AI, an actual AI product that you can buy, I don't know of another company that has something out there that's not a feature or okay, this is interesting, it's cool, it's a better than a Google search. There's nothing out there that I'm aware of that I've seen, and I feel like I'm pretty deep in this space. And so to me, that's what matters. And that's what you're just now starting to hear people talk about. On CNBC, it's the first time I've ever heard them say that FSD 12.4 was recently released. I've never heard them mention a dot version or anything. So it's interesting. It's happening slowly. Awareness is slowly coming. But I just, forget about the stock, because this is nothing. We're going to laugh that we were ever even talking about these prices.
Nice. I love it. Good job, Nick. Sat?
Yeah, one thing I would say is that Q1 typically is down. It's always going to be low for auto as an industry, generally speaking. So Q2 is going to be probability wise higher. And then I think the sentiment, I saw a clear sentiment after the voting, and everyone was reassured, both sides, the shareholder and the board members at Tesla, for the executive comp package. And I think that sentiment and having confidence, hey, we have our visionary leader, he's going to stay for sure. I think that sentiment is much more important. That's not something you'll see on the financials. And I think that vote of confidence is, I think, really shifted the sentiment. And then now you got the actual numbers for deliveries beating the estimates, then that makes Wall Street happy because they're happy with the short-term stuff. So now that they can say, oh, the trajectory looks like it's going to go, it's going to grow, not go down, right? So if you have numbers that don't, quote unquote, beat the numbers, and it's not going anywhere, it's going down, then they drop all these supposed issues that's around the company. And now it's the opposite. So I think with the good news and sentiment, it's both the numbers and the sentiment that comes in. And because I was looking at it when Tesla first became profitable, And then after that year, I started going down, and I'm like, but they're still having record profits. The financial says that otherwise. Meanwhile, the entire auto industry was going down, and yet Tesla kept on going down. So, and even with the $99 or $8,000 FSD, which is much cheaper now, with the interest rate at the current moment, people won't be able to still like the vast majority who don't kind of know about it, they're not going to be willing to pay that amount when they still have the loans being 6, 7, 8%. So when the interest rate comes down, then it becomes more of a feasible thing in terms of calculation. So I think there's like all these little things that's going on, but the sentiment for me is the biggest change. Like it's very obvious to me since that day we have more green days than the red, and now we have 10 consecutive days. So and it's always been that way that I've seen with Tesla. It's never the time that you think it should go out, like when the numbers are there or when volume production hit for Model 3. Like, no, it's like way after. And it's some trivial stuff that triggers it in some sense. That's what it seems like. But I think it's always like a recipe you're cooking. You don't see the finished product until like hours or days or months later.
Sentiment has changed. Seems to be the common theme that everybody here is saying. What's your thoughts, Justin?
Hey guys. So Herbert, I mean, there's obviously a direct correlation between when we published our video on the deep dive on Robotaxi and the breakout. So clearly it was because of that. So everyone's, talked about energy or deliveries. It has nothing to do with any of that. It's our video and my analysis, all right? But seriously, I think if you, I still hold by my framework. I think my framework is the most accurate from anything else that I've heard to date that tries to explain what's going on. I think no one can predict a 3 standard deviation move like we've seen in the past 2 weeks, right? It would be unreasonable to try to make that type of prediction. But we know a few things about Tesla. We know first and foremost that there are these looming lines of businesses, including robotaxis and Optimus, which have huge discount rates being applied because it's really hard to forecast with accuracy, right? The time of launch, the ramp-up schedule, how to think about the business model, the unit economics, or regulatory headwinds, all of those things. So all I'm seeing, right, is that I think that the market is sniffing out these opportunities and saying, hey, look, it's go time. And I think the framework you have to have, well, I should say before I go into that, I was sniffing it out since April, right? I was early, I was buying the dip, I was right there, and I was calling it every single day while you had people like Gerber kind of running victory laps, right, on CNBC while the stock was going down. I said, don't get distracted. This is irrelevant. All of this is irrelevant. And so if you think to yourself, okay, when does Tesla go to all-time highs, meaning above 400? If you think with a pretty high degree of confidence it'll happen over the next 18 months, then that implies a 50% call it, upside from here. So within 18 months, you're talking about an IRR of well over 30% a year. So the whole perspective you should have is, it doesn't matter what today's price is, frankly. It's just a matter of time until we go to all-time highs. And after we break all-time highs, then we fly much, much higher. So if you're an investor and you're trying to think, okay, should I get in at 260 or 240? Do I want like a 5% discount? Like it's kind of irrelevant. I think obviously it's go time. You should just buy on weakness. And you have to study the charts of comparable companies who have broken out of their multi-year downtrend like NVIDIA and Meta. And you have to realize, this is not the time to sell covered calls. This is the time to be buying the dips, right? And if you don't have enough exposure, you should be DCAing. That's my perspective. And yeah, I mean, I just don't believe it's related to many of the things that people bring up or try to point to. I think instead, institutions are sniffing it out, and they're basically front running a lot of this because we don't know what's going to happen on 8/8. It could be much better than we expect. So we'll see.
Just a quick pause and a little bit of an advertisement. The audience members, please consider following these speakers. The panels it literally is the top notch. You've got Jeff Lutz, the best in manufacturing and supply chain. You should subscribe to him on his X account. Better than the other famous people that other people follow to know what's upcoming in quarters. I mean, this guy's got the experience. You got Xander. He does option trading. If you want to know about what he thinks is happening in the near term, follow him. You got Justin, Lord Pretty Flacco, and you want to see the most detailed robo-taxi modeling, check out his X account, and you can see that, download that. You got Nicholas Gibbs. Again, just always top-notch commentary. I have him on my channel several times. Yet Sat is a long-time Tesla investor, and he can tell you the history of everything that's happened in the past, and he just reminds you of what happened. You got Adrian, he's just killing it. This guy is like the number one follow, it seems like, by everybody at this point. He holds spaces and so forth. Don't want to miss that. You got Simon Hale, and as I introduced him last time, he's a wealth manager, but he holds 300,000 Tesla shares, and he's really is much more of a just, you know, the way he thinks he'll translate what institutional analysts do. And of course there's Omar. This guy is just knocking out of the park. You want to see FSD videos, you want to know how Tesla's doing, follow him, and you can see his videos and show you what's actually, how they're actually performing. So hopefully I didn't miss anybody. Of course, Larry as well. So follow that, and the Cyberbulls account. You can see that in the bright red. Follow that account. We always do these weekly spaces. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com. So a quick question for the whole panel here. I just want to ask you guys, what do you think will happen after 8/8? Of course, we're all guessing. I'm not saying that somebody will know what's going to happen, but the general consensus is that there's a lead up to the event, this exciting event, and everybody gets in a frenzy. The stock rises, and at the event they sell because it gets, nothing they say is going to change the fundamentals for a year or longer, and so then they sell because they thought it went up too fast. Do you guys think that that's what's going to happen? Why don't we start with you, Omar?